It's no wonder that owning a home is often referred to as the American dream. While statistics show the home ownership is down from historical levels, it is still an aspiration for 61% of Americans. That number is likely to rise as the housing industry continues to recover. That is good news, not only for potential first-time homebuyers, but also for the overall economy. Hello everyone, and welcome back to my channel. If you are new here, then please subscribe to my channel and hit the bell icon. Today we will discuss about the importance of personal home and take a look at how much cash do you really need to buy your first home. The importance of home ownership. For many people, owning a home represents the stability, independence, and freedom of reaching adulthood. While that perception may be changing to some degree as more people wait longer to buy homes, it is still considered a major milestone. Real estate is considered by many to be a sound investment that offers unique wealth-building opportunities. Buying a home expands options for the future, whether you plan to sell and make a profit or leverage the equity in your home to pay for other major expenses. Benefiting a community through home ownership. Home ownership also helps to improve the area surrounding individual homes. The housing industry is closely tied to the economy. When home sales are up, so are jobs. Together, these complementary forces create a more stable local, state, and national economy. The community also benefits from the real estate taxes paid by the property owner. These funds are used for infrastructure services and projects including road repair, construction of schools, library options, police and fire protection, snow removal, parks and greenways, government social services. Cash needed to buy a first home. To buy a house, you typically need 3% of the home price for a down payment and 1.5% for closing costs. So, based on the typical U.S. home, which sold for $356,700 in the summer of 2021, you could move into your first home with just $16,000 cash. And at $180,000 purchase price, you could move in for half that amount. Let's break down how much money you need to buy a house. How much does it cost to buy a house? Assuming a purchase price for $150,000, here's what bottom line figures look like for home buyers using three common loan types. When you buy a home, you pay for more than just its sticker price. Insurance policies, government fees, and real estate taxes add to your bottom line, and your choice of down payment affects your out-of-pocket numbers. Some home buyers opt for a low down payment loan, which requires less than 20% down. Others choose no down payment mortgages, which need nothing down. Down payment. When you buy a home, your down payment is the amount of your money you contribute towards the purchase price. The remaining amount becomes your loan size. Statistically, first-time home buyers make small down payments than the general home buying population. Among all home buyers, the average down payment is 12%. Active duty servicemen and servicewomen average 4%. First-time home buyers average 7%. There is no rule for how much money you should put down. Some home buyers use down payments assistance programs as part of their purchase. Down payment assistance programs offer low or no interest loans of up to $100,000 or forgivable loans and grants to eligible first-time buyers. Many buyers combine the mortgage loan with a DPA to make a 100% mortgage. The best down payment is the one that makes you comfortable and leaves you with cash in your bank account to access in an emergency. Prepaid costs. Prepaid costs are upfront payments to third parties made at closing. Prepaid costs are not closing costs, which are fees for specific services. Rather, prepaid costs are advance payments for ongoing expenses associated with your mortgage or owning a home. Prepaid costs include homeowners insurance payments, mortgage insurance payments, and real estate tax payments. Closing costs. Closing costs are third-party fees paid when you purchase a home. Closing costs may be due to the title company, the municipality, your lender, and others. Closing costs can vary by loan size, loan type, location, or by mortgage lender and can range from less than 1% to higher than 6%. Home buyer, closing costs typically fall in the 1 to 2% range. When you're planning your first-time home buyer budget, 2% would be a good estimate to use. Earnest money. Earnest money is a cash payment home buyers make after the seller agrees to their offer. Earnest money deposits signal that the buyer is serious about the purchase and intends to follow through. How to meet your home savings goals. Saving money is always easier when you have a detailed budget and a clear goal. Calculate how much you can save each month and estimate how many months you'll need to save the money to buy a house. Buying your first home doesn't have to cost a fortune upfront. Programs are available to help you offset some initial home buying costs. Low and no down payment loans for those with low credit scores help make home ownership achievable. So guys, that was all about today's topic. See you soon in the next video. Goodbye.